Hello, guys, and we have some news for you. Well, there seems to be a sell off today. Part of that may be attributed to some fake news of crypto seizures in China. Now, I know you're not really allowed, technically, you're not allowed to trade crypto in China, except for Hong Kong, of course. But, people do over there, and it does affect the price a little bit. Probably not too much, but there were fake news of crypto seizures, and that caused a panic in the Chinese crypto market. So, someone posted fake screenshots of crypto seizures. Could have been the government itself, because the government's trying to discourage people from crypto. And, they will do that stuff over there. An allegedly fake screenshot of police approving the seizure of cryptocurrency is causing a stir within the Web3 community in China. Now, you can't really have exchanges in China, but you can hold crypto in China. You don't have to actually sell all your crypto, you just can't really do anything with it on a legal basis. I'm sure people go around all the time, but still. In a clarification statement posted by the City of Fuzhou Public Security Bureau, police said the circulating screenshot, which said the Bitcoin enforcement officials seized 38,000 Ether and thousands of Bitcoin owned by foreign individuals custodied on a Chinese Web3 protocol, was untrue. So they did not indeed seize 38,000 Ether and thousands of Bitcoins owned by foreign individuals, maybe even Americans. After verification, the relevant content was false information, probably put there maybe by government officials, maybe by foreign government officials, maybe by other people to actually dump the market. So I'm not really sure. Maybe this is what caused it, but I don't think so, because we had a dump yesterday too, and I think this is just a continuation of that dump on the altcoin market. Bitcoin itself hasn't really gone down too much. It's still like 43,000. Yesterday was 44K. I'm still expecting the ETF to actually come through tomorrow. So the initial panic sparked by the screenshot was likely fueled by its allusion to reality. Obviously, people in China are very afraid of the government coming and seizing its assets because, government in China is very prone to do stuff like that. Of course, like we also have in July 2023, a Chinese cross-chain protocol called Multichain was shut down after its CEO was arrested by the police. So it's not like this stuff hasn't actually happened before. So at the time, over $1 billion worth of digital assets from both Chinese and foreign users had been secured on the protocol and remain unretrievable. So there could be a little bit of a panic, a little bit of a selling panic, both in China and abroad. Maybe like foreign people want to take their assets out of Chinese custodians or protocols and then sell them on the market. That's definitely possible. So basically, this could have been the cause of a little bit of the dump, but probably not a lot of the dump. And the thing is, like I said, Bitcoin didn't really go down. It went only down by like a couple hundred points. Alt's really dumped. I do think they are recovering a little bit now, but right now I do think, like, even though Bitcoin's not going up, I think people are trying to get more cold hard cash to buy Bitcoin, or maybe the Bitcoin ETF when it actually comes out. Now, some people, most of us would rather hold the coin than the ETF, but some people would probably rather hold the ETF because it does have a layer of security. It doesn't insure you against market movements, but it does insure you against some of the other things that happen in the crypto space. So they probably want the ETF. And to get that ETF, and because it's a cash-based ETF, they liquidated some of their alts and they might buy the ETF afterwards. So I think that's probably the main reason, but maybe this is part of the reason as well, because they did cause a panic both from foreign individuals and Chinese nationals in China, because they thought that police and government were going around seizing all their Bitcoin. Not saying that won't happen in the future, but for now it is fake. So we got to look at another class of coins that definitely is, I think sometimes have been overlooked. I've been saying that Coinbase stock is a really good buy, and it has been. But, Binance going down has really benefited other exchanges. Now, Coinbase isn't the one that's really benefiting. Neither is CRO or any of those. It's OKX, BitGet, and Bybit. So I have two of them up. I think it might be time to look at these coins from these exchanges, because if they absorb Binance market share, their coin should go up as accordingly. If you look at OKB, it has more than doubled since the beginning of the year. It began the year around, 23, $24. Now it's 53, despite this latest dump. So it's a little bit more than doubled, which means at least it's kept up with the market. And I think it will actually do really good in this bull run. Of course, you do run the risk of the SEC suing it too, because the SEC likes to sue random things. Right now, it's only Coinbase and Binance, but if they win against Coinbase and Binance, they might feel emboldened to sue OKB and others. If you look at BitGet token, I think it's a smaller exchange than OKX. It's actually performed even better than OKX token. BitGet token, which is BGB, it started the year at around 18, 19 cents. Now it's 60 cents, which means it's 3x since the beginning of the year. And 3x is slightly more than Bitcoin has actually done this year, especially with the price right now. So this has actually kept up with Bitcoin, even outgrown Bitcoin. And I do believe like exchange coins do have a more solid foundational basis than most other coins, because you do use them directly on the exchange to reduce fees, giving them a solid use case that a lot of other coins don't have. So, I know like people are kind of, people want a Coinbase coin, but Coinbase is not going to make a coin. You can just buy their stock. CRO has a coin. You can look at that. But like I said, the big three that are actually benefiting the most from Binance's shutdown, or not Binance's shutdown, but like Binance's like market, kind of like market share retraction, because is BitGet, OKX, and Bybit. And how much has Binance's global market share retracted? Quite a lot. It's gone from about 50 at the beginning of the year to about 30. So it's retraced quite a bit from the maximum market share it had. And it might retrace a little bit more, although like I think most of the retrace is actually done. And as you can see, like this started going up once in February and then once very recently. Did have a plateau between March and about October, which is what most of them. So this is just like following the market. And that's to be expected, even though Binance Coin itself hasn't gone down and hasn't performed very well this year because of the legal business. And I think some of that business is definitely getting absorbed by other more foreign exchanges. So look at BitGet, OKB, and which is OKX coin. And if Bybit has a coin, you can look at that too. Bybit is mostly derivatives. Not a huge fan of Bybit, but it could still be a good investment, whether I like it or not. So the SEC, obviously, in a desperation warning, has warned people against FOMO. Why? Because they're probably going to approve the ETF next week, and they don't want everyone to buy in once the ETF gets passed. Now, some people are staunch advocates for buy the rumor, sell the news. Like I said, I really don't know if that's going to happen this time, because people are going to actually buy this ETF, and I think there is adequate demand for it. BlackRock's already got supposedly has $2 billion in the block. I cannot confirm that, but I can easily believe that, because we've been waiting for this for so long and there's been a lot of buildup to it. So I wouldn't be surprised if BlackRock was just getting ready to buy. But either way, the SEC doesn't want everyone to FOMO in, because Gary Gensler really hates crypto because it's been kicking his ass lately. And so does Elizabeth Warren. So there's a lot of government agencies that don't want a lot of people to come in, and they're saying just because other people are buying crypto investments, it may not be the investment for you. Which is true. Just because a lot of other people are buying it, it may not be the investment for you. Crypto obviously, is for the more risky of heart. Those that are more willing to take a risk. If you're on your retirement funds and you have a lot of retirement funds and you want to use it the next few years, probably don't invest in crypto. But if you have the penchant for risk, you're fairly young, I mean below 45, 50 years old. You're not looking to retirement in the next couple of years. This definitely might be a field you actually want to get into, because you have time to recoup those losses. Obviously, if you're going to withdraw from your retirement funds right now, you don't want to take that risk and withdraw at a lower price. But if you can set it out for 4 or 5 years, then that's where you actually probably want to invest in crypto. I mean, that's the way I see it. A market cycle is every 4 years. And every 4 years, if you just buy Bitcoin, there's not been any point in time where you would buy Bitcoin, wait 4 years, and then after 4 years, you lose money. Exactly 4 years. Even when the market is down, because each bear market has been higher than the last bear market. And from bear market to bear market, bull market to bull market, it has been about 4 years. So the SEC obviously is trying to scare some people off from investing in crypto, but there is some truth to their warning. And obviously, if you see crypto pumping like crazy, or Bitcoin pumping like crazy, may not be the time to buy at a high pump. I don't think we're going to smash the all-time high right after the ETF. Definitely wouldn't mind it if we did, but I don't think it's going to actually smash the all-time high. There will probably be a little bit of a pullback or a lot of a pullback after like an initial excitement phase, so you actually might want to wait for that. Once again, I do think dollar cost averaging or DCA is still the way or the best way to actually go about this. And the thing is, like, once again, the ETF, although I think it's good for the crypto market, especially for those that want to make money, and it provides some people with a layer of safety. Remember, it does not guard you against it does not, the ETF does not guard you against the price of Bitcoin going down. It's just more insurance, and there's really no insurance for the market dropping. So if Bitcoin drops really low, you still lose your money in the ETF. So make sure you know what you're doing. If you want to do leverage, which I highly discourage you from doing, make sure you know exactly what you're doing. Make sure you know you have enough collateral. Just do all that research first. And I do think, like, although I'm not like with the SEC and their dire warnings and their scare tactics of people, I do think you should do your research. I do think you should know exactly what you're doing, how these investment instruments work, especially in crypto. Because you don't want to be one of those morons that rushes in, does 100x leverage, and lose all your money, because that's so easy to do, and I see a lot of people doing that. So you still want to do your research, know exactly what you're doing, how much you can risk, and your risk tolerance, and then invest in a wise manner. So that part of the advice I think is good, but just trying to fearmonger people out of crypto, obviously I don't agree with the SEC. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.